Hi, welcome to this video data, which is on the 22nd of June. It's Saturday. Just going to be looking at what we consider to be a fantastic opportunity for the week ahead, which is to look at going long of the British pound. Now, in terms of the British pound, we did a video on it in the week, just so bullish. And what we like about sterling is the market is still pretty bearish and looking for far lower prices, but the price action now is looking like we could go higher. Now, in terms of British pound, we're going to look at it against four other currencies. So we're going to be looking at GBP USD, GBP CAD, GBP AUD, and a lesser looked at pair, which, although it's less looked at, still looks really attractive, GBP PLN, the Polish zloty. Now, for us, sterling longs, the risk is really low, reward potential is really good, just so bullish. Now, in terms of sterling, we are going to go and take a look at it right now. So we're going to go to the charts, so let's take a look at them, but please do keep in mind it is my view as of this moment in time. It can of course change in line with the market conditions. If you want all our trading techniques, our daily sentiment technical analysis of 14 Forex pairs, you can click on the link beneath this video, and at this moment in time you can get live access to our member centre. Right, we're going to take a look at the charts. I'm going to do GBP USD first. Right, we are on the chart of GBP USD daily, and the pound has come up quite nicely since our last video, and the price action looks pretty bullish to us. But before we do the levels, let's just look at the sentiment behind the chart. I want to start with this quote at the top. Prospect of a general election, yet another concern for sterling. Uncertainty to keep GBP soft for the near future. HSBC Bank. The prospect of a general election being bearish for sterling, it's out and out bullish, not bearish, okay, in our view. And I'm going to explain why, just like I go through these notes at the bottom. Now, in terms of when we did the last video, it was before the Bank of England, and the market was expecting a very dovish Bank of England, okay? But we felt that was factored into the price, and we felt there could be a hawkish surprise with a couple of monetary policy committee members saying the UK needed a rate hike due to inflation. So we thought there could be a couple of dissenters which would have pushed sterling up quite nicely. But even if the bank came in dovish, they weren't going to be more dovish than the market expected, and sterling did rise, just not as much of a rise as we'd hoped for. But they voted 9-0 to hold monetary policy. We expected two dissenters, but 9-0 was expected anyway, so not a problem. Economic growth forecasts were downgraded. Well, that was expected, so again, doesn't make any difference. But there was no talk of cutting rates, and a hiking bias remains in the Bank of England, even though there were no dissenters. A lot of people thought they might talk about cutting rates because of Brexit uncertainty, but they can't really. They have to keep that hiking bias due to inflation. It's at the BOE target and will have risen in June, okay, because the currency has fallen. Obviously, if a currency falls, it creates inflationary pressure. So, we did move up after the Bank of England, not as much as we hoped, obviously, but we're looking bullish on the chart. But let's look at the other fundamentals. Leadership race for the Conservative Party. Boris Johnson, hardline Brexiteer, remains the odds-on favourite, and he is likely to win. That's discounted by the market. Okay, they already expect that. Now, he has had a kind of domestic incident with his girlfriend, which a lot of people are saying he might have to withdraw from the leadership race. Well, I personally don't think he will, but if he does, that's bullish for sterling, isn't it? Now, what about a general election? A lot of speculation about that. That's not bearish sterling, is it? Because you've already got the worst eventuality in the price. The prospect of a general election basically means that you could get something better if you're looking for not a hard Brexit or a deal with the EU. Why? Because, well, let's say Labour win the election. Well, they're in favour, obviously, of not even leaving the EU. So, obviously, if they got into power, the chances of a hard Brexit would be reduced, wouldn't they? If there is another referendum called on Brexit, which a lot of the market are speculating about, well, that's bullish sterling as well, because a lot of people seeing another vote reversing the move to leave. So how can a general election be bearish for sterling? It can only be bullish, can't it? Because the worst eventuality is in the price. Well, that's our view anyway. Now, the odds of a hard Brexit, they remain low. They're below 25%. As we said in our last video, market's discounting way higher. Now, point number 6, just to show how oversold sterling is, we did it in the last video, is Societe Generale's view. The guy, I can't remember his name now, I think his name is Kit, said that, 140 is, probable with a sensible deal between the EU and the UK, and the odds are 75% on for a sensible deal. Okay, so for me, the bearish fundamentals have peaked for sterling. But what you very often get when a market becomes really bearish is you get facts put out or views put out of why the bearishness should continue, which have got no substantiation in fact. And this prospect of a general election, another concern for sterling, is a good illustration of that. Okay, so we're coming up, and I think the price action looks quite bullish. So let's just look at the price action and how we're playing the trade. Now, very interested in this candle, which came down to 125. As we were saying in the last video, test of a round number, weekly support level, low volume, no sellers down here. Okay, the selling looked exhausted. We finished blue. We just want 126 to give way. The next round number up to get long, 126.20 will come in. Then we want the 20-day moving average to give way. It gives way with this candle here. And then this candle here comes back to test the 20 on the tail, immediately comes back and finishes near the high. So the price action coming in to the new week looks pretty bullish. Let's draw some levels in. So basically there's a trajectory. I now think 126 should be good support. And that's, I think, really should be good firm support now. And then you got first level of support just there. Okay, so you got two candle bodies and a tail and the 20. Okay, now so far obviously not too much profit. It's 120 odd pips, and we've used an aggressive entry. We're normally pretty aggressive with our entries if we're confident, and now I think we're just about to confirm the move higher, technically, so to speak. If you're a bit more conservative with your technicals. In terms of finished near the high, really just see it get taken out, and we should be going higher. I think we've got good support here now, and then you can bring your stop or put your stop behind this level. Our stop in the member center is still behind this level. I am going to bring it up behind 126, but well clear of the number, so I'll do that on Monday. If we break higher, where could we go? Well, I think 130, I put that in the member center as a target, but the way I see the sentiment technicals right now, the second target looks pretty achievable, up towards 131.80, and maybe up towards, sorry, I'm going to put it there, 133.30. So there's the risk and there's the reward. I'm just trying to work out how much it is. It's about near enough 3 to 1 to there, near enough 4 to 1 to there. So I like the fact that the market still remains very bearish of sterling generally, but we're seeing, kind of what I would consider to be, bullish price action. So the bearish extreme is peaking. People who've sold here, stops around here. People who sold late, their stops will probably be a bit closer. Those, some stops are already being run in my view. Get above here, then more stops will get run, and the bearish extreme will be corrected. So I really like the look of GBP USD, but as I said in the last video, my major exposure is in crosses, because the GBP against some other currencies in the crosses, there could be even more upside potential. And the first one we're going to look at is one that's shaping up right now, which is GBP CAD. So let's go and look at our next sterling pair, and I think it looks really attractive. So let's go to the chart. All right, on GBP CAD, and we just love the look of this setup, and I know it's popular with a lot of members in our Facebook group as well. If you actually want to join the Facebook group, it's free. You can interact with other traders, swap ideas and so forth. Just join on the link beneath this video. Now, the reason I think it looks so attractive is if we look here, the Canadian dollar, it's been strong on most major currencies recently. It's probably the most overbought major in the short term, and the GBP for us most oversold. Why has the Canadian dollar been so strong? Well, Canada has some really decent data recently. Okay, retail sales were a bit flat on Friday, but data's been generally pretty good. The market now sees no rate cuts coming in Canada. They did until recently, but the recent data has made the market shift its view to the Bank of Canada will remain on hold. So the Canadian dollar has rallied. So no rates coming in Canada. There's no rate cuts coming in the UK either, as we've just seen. And unlike Canada, the UK has a bias to hike. So we think, you've got the most overbought currency, major in our view, against most oversold. It's worth a long, and we've already come in. And it was this level that interested us on Thursday. We poked through the level and came back above it. And I wanted to come in long through 168.30, okay, and didn't get the entry. This candle here obviously finished blue, but it started red and it was testing this tail, and just thought go for the aggressive entry, go through this body here, this red body. She springs back up, triggers us long at 167.60. We're now 168.40. So just 80 pips, but it is a very aggressive entry. Now, in terms of our stop, we left it back, or put it at 165.70, and that's where it still is. So basically a nice blue. You've got to get back through this level, those two tails, and a round number to get our stop. If we come down, I just don't see that happening. Of course it could. We'd be patient and just wait. Obviously things can change, but that's what we'd do if things came, if the pound came down. But I've got a feeling that the pound could just break out through the high, and if it does, then it'll be off to the upside, in my view. So 168.40 was the settle. I think 168.65, good level to come in. Just a bit of strength, and then I think we'll be off the upside. If that happens, we'll bring our stop behind these two tails, probably 166.30, something like that. We'll see how it goes on Monday. And then we'll see how we go. And I think that's a good entry for fresh positions. And just like with the British pound, stops will get hit, in my view. They could be anywhere here. People who sold late can have close stops. This lot here might have stops here, but the stops are close, in my view. Where could we run to? Well, 174 looks on the cards for me. Okay. And just like in most British pound pairs I'm looking at the moment, I think we could go up to recent highs, which is 177. So you can see if you came in on a breakout, stop well clear of these tails, you've got good risk to reward, we got 4 to 1 to here, 5.5, 6 to 1 to the second target. Obviously, it's got to come off, but for us, worth the aggressive entry. Looking for the breakout, but if we drift down a bit, we'll hold. But I think a breakout could come on Monday. Great entry for fresh positions, but obviously that's just my view. Obviously bullish of sterling. Now in terms of the final two pairs, GBP AUD, GBP PLN, we're in both of those. We did them in the last video. I'm just going to update the trade setups as I see them right now. So let's go and take a look at them. All right, just the last two charts very quickly. I'm going to use the charts from our member center. This is GBP AUD. Also, obviously, GBP PLN, we did them in the last video. So just a quick update of where we are. In terms of GBP on AUD, we really like it because the AUD we consider a weak currency. Economy not doing well. There's a bias towards cutting rates in Australia as well. And we did a very aggressive entry. We came down here. We go below 182. Just like over here, we didn't think the move below 182 would be sustained. So we started to steady up. We'll come in long on that blue there. We'll come back beneath, but finish blue. Then we push up. Get through the 20-day moving average, which we always like if we're bullish. Come back to test, push off. Indecision candle. Then this candle tail doesn't reach that one or the 20, and we finish below the round number. So yeah, we're in at 182.30, and we got, you can see 160 odd pips in profit. Stop back behind second level support. If we get stopped out, we're obviously going to give back our profit, but our ultimate risk, or our risk, is just 70 pips. Now, because we're looking for a really big move, okay, we're not going to trail our stop too quickly. 160 pips is not enough on this trade for us. If we're wrong, we're wrong, okay? But yeah, we've got ambitious targets. Okay, got weekly resistance at 194. That's our ultimate target. That's off the top of the screen. And also this one here, which is just daily chart highs. So, our risk that we took on the trade against our reward are just so good. Okay. Now, in terms of the trade itself, if anyone was interested in it, I think it looks very attractive. On a move through that candle tail there, 184.35. Okay, we're just firm below the round number. Low volatility points to a big move. You can see it on the Bollinger Bands. Poke through, I think we could quickly gravitate back up to the highs. If that happens, okay, we do break this level, I'll bring the stop up to lock a minor profit. But I don't trail the stop too quickly, okay? I want to give this one kind of room to breathe. We could drop back, but I just think, we've got our stop behind second level support and clear of it. I'm hoping we're going to be okay with it. Obviously, I want to move the stop up, but it's looking okay the way it's shaping up at the moment. Obviously, we'll see how this one goes next week, but kind of so far, so good. In terms of GBP PLN, sorry, let me just get it lined up. This one isn't doing exactly what we want yet. Now, we are bearish of the euro, okay, on the GBP, which means, PLN is a proxy to the euro. If the GBP rallies on the euro, it's going to rally harder on the PLN. The proxies, not just the PLN, any euro proxy, I think, will go down quicker than the euro. Now, in terms of this one, not doing quite what we want. It's a big, heavy fall. As soon as we come into this support level here, you can see over here you had two tails beneath and a bounce off. It's also a weekly level. Beneath on that tail, back blue, we'll come in long on this blue. I was looking for the breakout. Doesn't happen. Red, back to support and through it. But that tail doesn't get anywhere near that tail. Finish above support. But really, it's got to get through this 20 now and this level here. If it does, that is heavily, heavily bullish. And I think we'll go pretty quickly up towards chart highs. Obviously, manage it as it goes. But it's a 5% move with no leverage if this one comes good. Risk reward on it is really good. You can see where my stop is, just behind that outer Bollinger Band, okay, and behind the tails. Of course, we could get taken out, but the risk against reward on this one, very, very good. So there's our mix of pound contracts. We treat them all as one trade. And yeah, hoping next week sterling has some decent upside. But we'll see, of course. I'll update these trades in a future video. But yeah, heavily bullish of sterling, but I'm sure everyone's gathered that already. Yeah, I like the risk to reward. We shall see. Right, that's the video for today. Thank you very much for watching me as usual. Take care. Have a good day.